Okay, I'm gonna let him in.
All right.
Okay, I'm gonna let him in.
All right.
Welcome, everyone.
Okay, I'm gonna let him in.
Get settled in, and we'll get started here in just a few minutes.
Good afternoon.
Hello. Welcome, everyone.
Okay, I'm gonna let him in.
Get settled in, and we'll get started here in just a few minutes.
Good afternoon.
Good afternoon. How are you?
I'm doing good. Thank you for
Welcome,
asking.
everyone.
Okay, I'm gonna let him in.
Get settled in, and we'll get started here in just a few minutes.
Good afternoon.
Good afternoon. How are you?
I'm doing good. Thank you for
Welcome,
asking.
everyone.
Malay, I have an echo that's repeating things.
Get settled in. Are you? Okay, I was wondering.
Good afternoon. Yeah, it's still happening. How are you?
Okay,
Thank you.
problem solved. Thanks.
Thank you. All right. It's good to have everyone coming in. We're just,
We've got people still coming in, so let's hold off for just a second here.
all righty.
Yeah, we've got a pretty big group today, so should be great. All right. Looks like we've got most everybody in. Welcome to Technotrader's workshop on 3 dark pool footprints that signal major reversals with Martha Stokes, CMT. My name is Mel. I'm Technotrader's Senior Technical Analyst and Head of Student Support. We are super excited that so many of you could join us today. Today's workshop will be an interactive session. Unlike the usual webinars, we'll take questions throughout. So please feel free to turn on your camera and raise your hand to ask questions at any time. Just wave and we'll call on you. Or you can use the reactions button in the meeting controls. Either way, we'll call on you to unmute your microphone to ask your question. Once Martha has gone over the 3 footprints, we'll then take your stock requests for Martha to analyze. So find the questions chat box now so you can enter the stocks or ETFs you're interested in. Be sure to take notes. Those who have been trading for some time will be able to take away some pointers to apply immediately. Those new to trading will have a head start on your learning path. If you experience any connectivity issues, it's usually best to exit the webinar and then return to reset your connection. And for those who stay until the end of the workshop, we'll hold a prize drawing to give away some 4 high value courses. In today's workshop, you're going to learn about 3 dark pool footprints that signal major reversals and how to start spotting them using some of our unique relational technical analysis methods. Be sure to pay attention to the details Martha provides, things like where in the long-term trend they develop, the shapes of the formations, which groups precede and follow the pattern, etc. And now our disclaimer. Today's workshop is for educational purposes only. We do not recommend stops. Traders and investors should use today's teachings to research further before forming an opinion on the merits of buying or selling any securities. Also, all the material presented is copyrighted, all rights reserved. I'm proud to introduce your instructor today, Martha Stokes, CMT. Martha is a chartered market technician. According to the CMT Association, there are less than 5,000 chartered market technicians in roughly 137 countries. This is a pretty exclusive credential compared to other financial designations like the CFA, which has over 200,000 charter holders, making the CMT community highly specialized in technical analysis, trading, and market strategy. Martha has been a member of the CMT Association since 2005, when she received her designation based on her groundbreaking thesis called Cycle Evolution Theory: How to Identify Evolutionary Cycle Deviations. The association no longer offers the option to write a 100-page thesis for passing the final level 3 of the certification. I know because I'm moving through the program myself. But the requirement back then was that first the topic had to be approved, and then the work had to add to the body of knowledge of technical analysis. The vote was unanimous for Martha's thesis because it really shook up how cycle theorists had used cycle analysis in the past. More recently, Martha presented relational technical analysis to the CMT Association, which you will start learning a little bit about today. Martha is the co-founder and CEO of TechniTrader, where she is the head instructor and course creator. She is very active and extremely dedicated to supporting our students and speaks often around the web to bring a more effective perspective to the way people view and trade the stock market. And now let's get started. Here's Martha.
Good morning, everyone. I'm very excited to present to you. Who are the dark pools? I'm curious if any one of you have an idea of what the dark pools are, what your opinion is. But I'm going to go ahead and proceed. If you have an answer to that question, you can raise your hand. If you don't, then we need to delve into this a little bit fairly quickly. All of you, or most of you, have a pension plan, right? Something that either you are self-employed or your employer provides to you. 80 million, and that's a huge number, of families in the United States have pension plans from their corporation or from their small business. That is a massive quantity. That's families, and most of the families have 2 pension plans. The dark pools are the giant buy-side institutions, some 20 to 25, who are all private, and the 100 large private pension funds who manage and take care of your pension plan. Your corporation doesn't have the skill and knowledge needed to manage your plan in the stock market and other financial markets. They need to hire an independent private company. Now, why would these dark pools be private? Why wouldn't they go public? BlackRock is public and State Street are public, but they're global asset management companies. They're not dedicated to pension plan investing that grows over time and builds the financial wealth of the middle class of America. You are part of this group. You are benefiting from the dark pools and their dedication to the individual family in this country and elsewhere. There are other dark pools in other nations as well. It's not just in America. So these individuals are private because they don't want to have investors tell them how to invest your money. They are futurists. They are constantly looking. 2 years ago, I'm going, students, our buy-side institutions, our dark pools are buying biotech like crazy. They're buying biotech like crazy. You need to focus on that. They are very visionaries. They see the future. They are always looking for the new technology that's going to drive the smaller company and the larger company to reinvention or new technologies and throw it forward. AI is a tool. It is not being used as you are told on the retail news that AI is everywhere and everybody's using AI to trade. On the professional side, that's simply not true. These are very wise people, and they know what the future path is going to be, and they investigate each of they hold 4,000 to 5,000 companies out of the 6,600 companies that are listed on the US Stock Exchange today. So they hold a ton of different companies. Are they investing in gambling and oil and gas? No. They are not short-term traders at all. Everything is the perspective of long-term growth using the new technologies, and there are 20 new technologies coming to market. Everybody's all gaga about AI and an AI bubble. There's no AI bubble. AI is a tool, and it is transforming every new technology into this huge, faster and faster growth rate because of the AI. Now, an AI is not intelligent. Do you know what an AI really is? It's a really, really big library. And each AI has its own little library. And there's a master AI that communicates to the other AIs. And when you ask a question, it funnels that question to that specific mini AI that's out there in the thousands and thousands of libraries, and it pumps back the answer. Now, the AI can't tell whether that answer is true or false. So now, since I complained to Gemini and Google, that now they locate where they got that information so you can check and make sure. The dark pools are the most important people that you need to follow in the market. And you're here because you understand that. This is the bull cycle of the market participants. I've presented oftentimes when I'm doing a webinar to try to explain to people the complexity of the market. Wall Street versus Main Street doesn't exist anymore. When retail news says, hey, let's find what we should explain why the market went up today or down today. Oh, it went down yesterday because of investors. Which one? There's 14 different market participant groups. Which investors are they talking about? Who knows? They don't even know. They're just using it as a methodology. So don't listen to the news. If you can help it, minimize it at all costs. This growth line can be intraday. It can be daily. It can be weekly. It can be annual. It can be 5, 10, 15, 20, 30 years. It's always the same cycle. And it continues. However, we are adding new market participant groups as we go along. This is a massive change because in 2008, there was the banking debacle. Before that, all we had was mutual funds and pension funds, and they relied on all the sell side, the big money center banks to provide mutual funds, develop for them and everything. After the 2008 banking debacle nearly collapsed the global market and crashed for a Great Depression, and they went to the buy-side institutions were going out of business. Thousands and thousands of small asset managers and small pension funds failed, and those people who had that money, they lost it. It was catastrophic. It was a catastrophic loss. The buy-side institutions went to the legislation because the banks had gotten their bailout and said, can you bail us out? And the legislation said, no, you're on your own. So the buy sides went back. They discussed things with each other because the 20 or 25 know a lot of things. And they said, well, we've got these ETFs we've been developing. Let's promote those. And they saved the largest companies, and the strongest companies were saved because they started promoting ETFs. Oh, you can buy this ETF and invest, put it in your pension plan. And if you want to sell it, you can sell it the next day, just like a stock. So it saved the industry. Meanwhile, since then, buy-side institution has been growing larger and larger and larger every single year. How many assets under management do they control? How many trillions of dollars do they control? We already know they have 4,000 or 5,000 U.S. stocks, and they only trade U.S. stocks because they are promoting the corporations of the U.S. because they are holding the pension plans and investing for the behalf of the middle class of America. That's what they do. $200 to $300 trillion is under asset management worldwide right now by the institutions and by global asset management companies. This is a massive amount, $200 to $300 trillion. If you added up all the billionaires that live in the United States, it doesn't even come close, not even close. So they control the vast wealth of this country, and they are very serious about managing it. They have what's called support the market. In 2019, they saw all the younger people that had pension plans. They were buying ETFs. They didn't want to have mutual funds because their parents lost everything. So they wanted ETFs, and they're going, we have a problem. We have a serious problem. If all of those young pension holders panic and think the market's going to crash and they want to redeem or sell all of their ETFs, we have a major crash on our hands. We can't let that happen. We know that the average pension fund holder will tolerate a 20% decline and hold because we tell them to, because we encourage them to hold through to 20%. Below 20% is a bear market. So all we have to do is keep anything from hitting below the 20%. In 2022, they first tested it. It worked like a charm. Everybody was panicking. They were selling ETFs, and they came in and they supported that market. And every time the market went below that 20%, they were pushing that price up on all the stocks that they had. Boom, boom, boom. Why? Because they had a huge reserve of capital that they had set aside for this rule. So there is nothing more important than what you're learning today. And you are part of this. And that's what's so exciting. Buy-side institutions start the bottoms, and we're going to talk about those today. Corporations are doing buybacks. They're supporting the market more right now. Buy-side institutions are looking for bargain hunting because AI made a terrible mistake in the fourth quarter and sold down a whole lot of companies that had excellent reports. We have the professional traders and independent traders and professional trading companies. These groups are the ones that you want to piggyback on. You want to be with these groups because they follow the dark pools. They track them, and they also provide some services to the buy-side institution. So the buy-side institution says, our ROI is not as good as we promised. So then they hire the professional trading companies or independent traders to trade and boost their ROI so that the pension fund holders hold. Because if the pension fund holders hold, there will be fewer bear markets and they will be very shallow. And that's the whole goal. This is the retail group. Only 20% of all the activity is on this side. And it's a whole bunch of different types of groups of people. 80% is on the professional side. And this is where you need to pay attention. High frequency traders trade on the public exchanges. All of these groups do not. So the 3 footprints overview. We're going to talk about bottom formation because dark pools create the bottoms. Bottom completion, because once the dark pools start to complete that bottom, that is when the pro traders start using their nudges, their hurdles, their pole vaults, all the new candlestick patterns, and hybrid leading indicators to see when and where the buy-side institutions are going to slow and pause. Because once they've accumulated over a period of weeks or months, they pause their orders and let the price move up. They are not speculators. Sometimes the market will go in a platform position and they will continue to move up because fundamentals keep going up and keep going up and keep going up. Buy zone is the next one. There is a specific buy zone on the charts that I will show you that shows where the dark pools are. So our footprints on a bottom formation start early. We start to see some hidden accumulation here. And we see that they're starting to slow this selling down. This is the most dangerous thing for most people because pro traders get in the selling short way up here and they ride it down. They have a good time. But retail traders often think that they should buy on the dip or whatever is going on. And it becomes a problem because you're using recommended stocks or you're using chat group charts or whatever, the hot stock or the panic stock for the day. So you often get in very late in the runs, especially if you're day traders. So you're here and you're going, oh, let's sell it short. And then all of a sudden, poop, 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 up it goes. You may have made some profits here, but a lot of times what happens is you get into it late and you have a whipsaw because that is a dark pool pushing that price up. And then it goes down again and you think, oh, it's going to go lower. It's going to go lower. Oh, here's a nice entry. And then they pop it back up and it runs up a little bit. So what we have here is a buy zone. This is their buy zone right in here. This is where the fundamental value is for this company at this time. And this is a common pattern. There'll be people who see these little runs up and then running down and they'll think, oh, let's sell it short again. Or you'll wait because you think, oh, maybe it's going to correct. This is the final level right here, right across here, where the dark pools will pause their orders right here. And you can see it because it kind of sank the next day. There wasn't a big run up. So this is a bottom formation that is underway that you have to be aware of. We have a little surge of activity here, and we have the moving up. It is hard to see at first. It requires spatial pattern recognition skills. This is something that AI can't do, But your magnificent brain, you have a magnificent brain that will be able to identify these once you learn these over time. Footprint on the bottom completion. Now, this was a flash crash. We have flash crashes quite often nowadays because of the news. The news is highly, overly influential for retail swing traders, day traders, and other traders of that nature. So you're our options traders. This is a V bottom. They're very common because they're caused by a flash crash. The stock was going to move up, and you're going, oh boy, I'm going to have this engulfing white, and I'm going to make a lot of money because this stock is going to move up. And the next day, it not only gaps down, it runs down, and it runs down again. This is a flash crash. These are whipsaws, and they're painful because you lose a lot of money on them. The dark pools go, uh-oh, this stock is way below its fundamental values, which are right up here. So this fundamental value is in this area right here. The stock had been trending down and it was starting to recover. They pushed the price all the way back up, and even though there's some selling on the bounce, they continue to pop it up into this buy zone right here. This is their bottom completion level. This is the bottom completion level. From there, they allow pro traders to nudge and push it up, and then it may go sideways and continue up. And now we're ready for some really big activity going on there. So you have to understand that there's quite accumulation going on, and hidden with their volume is low because they're pinging on a time weighted at average price over several weeks to several months. Okay, the only time you're going to see these big candles is when the stock is way, way below its fundamental level. And as the fundamental level moves up, they may start accumulating. There's a little accumulation in here as well, but they will stop accumulating and allow the pro traders to drive price up in a speculative manner. Pro traders do nudges and pole vaults, hurdles, resting days, all kinds of things to trick the HFTs into gapping a stock up. Their goal is really not to bother you because you're not a major factor. A lot of you feel like, oh, Wall Street's against me or the market makers against me. No, you just happen to be in the way, in the wrong direction, and that's all it is. So this is a level of bottom completion. They may continue to accumulate, but this is the bottom completion. This is the fundamental level. This stock is not going to go back down and retest. V bottoms are very common. We have rounding bottoms. We have basing bottoms, which are flatter. There are several new bottoming patterns. Every single one of them is created by the dark pools. So this is your little resumption of consolidation and resumption of consolidation. So they are accumulating and continuing to move up. Footprint number 3 is a buy zone. And you have to use the hybrid leading indicators. We have them written for several different software companies and modified them. This is TC2000 that I'm using because it's the most common one with my group of students. They love it. You can use any charting system you want with the education. This is a flash crash. It was not supposed to happen. This company actually had pretty good report. This is the push. The push is it starts here, it goes down, it comes back up, and it closes higher. The next day we have sell on the bounce, and then we have another push up. And during that day there was also more sellers, but they still drove it back up. Where is the middle of the buy zone in this chart? We can see right here with this volume oscillator that they have decided where the buy zone is, and this is their buy zone. This is a critical thing. Then when you follow this, you can see that they are buying periodically. They're pinging, and the volume is pinging this. And then all of a sudden, we have pro trader nudges right here, right here, right here, right here. And they're holding. They're holding. They're nudging, nudge. Okay. And then all of a sudden, huge gap up, because the fundamentals actually are here with this company. But the buy zone was set lower because there were so many sellers. We also have the flow of money coming in or out, And I will show you percentage of shares held by institutions, which is also a critical data, fundamental data for you to follow. It's right in your stock charts. When we start analyzing your charts, we'll have this. So pros are riding this run up, and they keep nudging it and keep nudging it and keep nudging it. And at some point, they will start to say, okay, it's time to sell. It's right in here. And then they will start selling. Dark pool candlestick footprints, how they differ from retail candlestick interpretations. We have a buy zone that's set right in here. It may fall below or above. If it goes above their buy zone, they stop, the TWAP stops. If it goes below, they may wait to see how far it goes below, and then it triggers and nudges it back, right back up into their buy zone. So that is a major thing to study and learn. It is not easy. If you are a beginner, this is going to be, oh my gosh, I don't know what I'm doing. Don't worry about it. You can do this. You can study this and learn this, and you will go, oh, this is what she's talking about. Oh, I see what's going on. And then we wait for the pro traders' nudges to push and drive it into a speculative move with HFTs, memes groups, and everyone else. You need to be ahead. This is a penny spread market. Pro traders do not day trade. Why? Because the penny spreads are too tight. When you're day trading, and swing trading, you're trading against other retail traders. That's what you're doing. Okay. So why most traders miss these footprints? Retail traders use recommended stocks rather than using the charts. You have to use the charts. Recommended stocks are stocks that have already started to move or are already running with momentum, and they are not ideal for huge, consistent profits. Consistency builds confidence. Why? What is it that you do that you're very good at and you're extremely confident? Because you're very good at it. When you are very good at reading the stock charts, and that's what I teach, then you will be able to say, oh, and one of these days you'll go, that is a near perfect entry signal. How do you know that? Because you've seen it before, and you've seen it before, and you've seen it before, and you've practiced on the simulator, and you go, oh, this is a perfect setup. And it is, because you can get in and write it up as far as it'll go, and then exit with the pro traders. When the pro traders start signaling with the volume oscillators and other indicators, okay, I get out with the pros. I start with the pros, and I get out with the pros. It simplifies the whole thing. Waiting for a recommended service, recommended stock, or listening to the retail news. Retail news is worthless. I can't believe what they're saying. And they're very influential for a small group of people who really don't know. I had somebody the other day saying, should I buy SpaceX? And I'm going, oh. And he says, I don't have very much money, but I think I'll get wealthy off of this. And it's like, it's terrifying because it's hugely speculated. They have not developed spatial pattern recognition skills. SPRS is important, and your magnificent brain is 1,000 times better at this than the AI ever will be, because charts are and language, and AI doesn't understand language very well, even still. It struggles with it. It's a language. They are not using the new candlestick buy entry signals that I've talked about and we'll talk about today. There are springboards. There's all kinds of new candlestick patterns. The old candlestick patterns are fine, but they don't have the reliability of the new candlesticks that I have discovered and that I teach my students. Retail traders use price and time indicators. Hybrid indicators indicate before price moves. That seems impossible. How can that happen? Because it's the dark pools moving in, and it's the subtle volume over time that actually creates the momentum that follows. So with your price and time indicators, you're always going to be late. Price has to move before they signal. Well, in a penny spread market, in a millisecond market, you're going to be left behind. You're going to be getting in, and then it's going to whipsaw because pro traders are taking profits or whatever. So you have to be careful that you have the right indicators so that you can find the dark pools and confirm that this is a dark pool, buy zone or formation or whatever, and then follow and watch the pro traders and get in with the pro traders activity. Okay, we're going to start with live chat workshop instructions. You can submit your tickers in chat, use reactions to raise your hand for questions and comments, unmute your microphone and speak up. Martha, I will take your charts. I'm switching over to TC 2000 now. And I want to start first with something that is I developed many, many years ago, and that is my market condition analysis scans. And it's sort of like an AI because the computer has all this library of information and it gets it every day. At the end of the day, I go through and sort this about 6 or 7 o'clock in the evening after all the data is in, because the dark pools delay their orders to the national clearinghouses, so their data isn't in the intradays. It's not there at all. It's in the daily charts. At the end of the day, you can see the dark pool activity. That's another thing that you need to really focus on. I wrote these 7 market condition analysis scans because my floor traders were having difficulty, because futures tell you how the market's going to go open, but it doesn't tell you the bias of the market or the momentum of the market or what's going to happen. It just tells you what's happening with futures and E-minis. So I asked the market for all the stocks moving with strong momentum to the upside for that day. And that was a smaller amount, 102. And then I asked for all of the charts that moved down for the day. And you can see there's a lot of green ones in here. And that is because there was a lot of activity. 113 and 31 of them were green. So I subtract the 31 green ones because that's a shift. That's either pro traders buying that stock at the end of the day because they know it's going to go up the next day, or dark pools, a late access, and they are accumulating that stock. So I know that for Monday that the activity is going to be neutral. It's neither strong momentum or strong momentum to the sell side or buy side. Then I asked this for the computer to give me all the information it has on the buy side dark pools. There's 189 items this time. And I also am tracking the HFTs and how active they are and how reflective they are of the dark pools. And that tells me that the dark pools are very active and accumulating. Then I ask for all the stocks that are in bottoming formations, because I know that every bottom is developed by the dark pools. They're the only ones that develop them. Nothing else does. It's the buy side dark pools. There's 31, which is at average, so that's pretty good. It has been much higher in previous days last week. Then we have the consolidation scan. Now, why would I want to know about consolidations? Because pro traders create consolidations. They go sideways with little tiny candles that don't look like anything at all, but are very important. And that tells me where and how active the pro traders are in that area. And then I ask for all the stocks that are moving or turning down in a trading range situation. Between this trading range and the momentum sell, I can see if this rises in numbers and this rises in numbers, I can tell that we're going to have a down day, that we're going to have a correction over time. And that is 33, so we have very little. That's almost a void. And then I want to know over 20, the average trading days in a month is 25. So I say, give me all the stocks that have 25 days of improvement over price. And we can say that, there are very few stocks that are actually improving price over the past month. We have a market dominated by dark pool activity. There's not a lot of momentum. There's not super high momentum from the retail side. And the other thing that this gives me is, okay, where are the retail? What are they buying? What are small funds managers buying? How much HFT activity is it? Where are they selling? What are the smaller funds and retail groups selling? What are they scared of? What are they dumping? And it tells me, they're dumping biotechnology. And of course, dark pools are buying the biotechnology. It tells me what industries the dark pools are accumulating in, what stocks are in bottoming situations. The banks regional have been heavy selling from the small funds managers have been just dumping banks, and the dark pools are buying them. Sell-side institutions love oil, and they've been speculating that, and they continue to speculate it, although it's running out of steam on that. So this gives me all the information I need to know and tons of extra information to move forward. And we have scans that actually also hold this stuff. So we're going to go to your charts, and I'm going to analyze your charts.
The first request from Sheila is Palantir, PLTR.
Oh, one of the darlings. Yep. Okay, we have it in a sideways pattern right now. Students are studying this. We can check this on the weekly scale, and we can see that it moved up. We started talking about this stock a long time ago as it formed a bottom and started to move up and show its strength as a company. The software infrastructure is important. The question is, can it continue to have a growth pattern over time? This started to be a little bit of a top, but it is not rounding. And I don't see any dark pool activity that would imply that it is a rounding top formation. We have smaller funds dumping, but we have a lot of control going on in here for this stock. If we look at the monthly chart, we can see that this company's IPO'd in 2020 and crashed, as most do because they don't have the earnings that they need. And we can see that the DPO indicator shows that there's very good strength in this cycle. The cycle is fine. In TSV, we see that it's just moving softly above and below. That's not bad. They're not heavy into it one way or another. They're just waiting to see how it works. It had a decent report, and its PSHI is still low, but it is improving. So the stock would be more of a buy than a sell because it has the power behind it to hold it up. And that's the dark pools are slowly, very slowly adding to their inventories of PLTR.
Okay, next one is Bloom Energy, BE.
Bloom Energy is in, I guess I don't have that on yet. Hang on a second. I take it down so that I don't have the thing interfering. Okay, Bloomberg Energy, electronic components. Oh, I really like this stock. Electronic components were featured in the Sector and Industry Report for 2026. Electronic components are a major part of the AI technology, the data centers that are being built by many, many large corporations are building these huge database centers because what they have is a massive library of data that the AI pulls from. So they need these huge things, and electronics components are a major part of that development of infrastructure. So BE has a bottom formation. This is where the dark pools start quietly accumulating, and they have another accumulation here and another accumulation here and here. Then they kind of let it run up, and I don't see an accumulation right in here. It corrected a little bit, and then it's moving up. Slight accumulation in here. It has 86% shares held by institutions, which is very good. And it reports on 7/30, so it has another month before it reports. It is a little bit of a rounding top right here because it's gotten a little bit over speculated. We'll look at the weekly chart and we see, yes, it's a little over speculated, but it has strong support for this at this level. So it could correct down here and then have another run up. What we see a lot of is what you don't realize is we're in a great bull market, one of the greatest bull markets of all time. 1920s had 5 new technologies. 1990s had 6 new technologies. This has 20 new technologies, and AI is making it boom faster. So this stock went sideways after it's corrected. It's a young company, and now it's building and growing. It has potential. And we'll look at this. Yes, it's waffling a little bit. So we had 45% improvement here over the prior quarter, but this was only 44. So it shouldn't, the fundamental level is right here. Okay. It has gone above its fundamental and it needs to step back down into its fundamentals, and then it will be a good stock. You should be building watch lists. Does everybody know what a watch list is? Anybody? Do you know what those are? A watch list is something that you build that if you have a good charting system like TC2000, you can build your personal watch list right here, and you build it based on your swings trading style or whatever trading style you have, and then you set it up and you monitor those stocks, because at this point it's not ready for a swing trade. It needs to correct a little bit before it will be a good price to move up. So you put it on a watch list and you wait. Now, if it has stronger revenues coming and it stays sideways right here for a longer period of time, rather than correct, it has two ways to correct. Sideways or up. And that's a pretty, now when I put the rectangle around it, you can see that's a pretty nice area here that's going on. And there is some hidden accumulation happening right here. So my guess is that it's going to probably shift sideways, and that actually makes it more enticing to put on a watch list. And since all of you are here and you're all sharing your charts, you can put this on a watch list and watch for it. It will have to break out of this resistance and move up further, and it can, because it's in a new technology industry that is in high demand growth. There is no bear market on the horizon, folks. I know that the news talks about that, or then they shift and they say, oh, everything's going to go up for all eternity. It's like, make up your mind. This is a very long bull market. We're going to have corrections. They may go 20%. They may go sideways for long periods of time, but the great bull will last far longer than any other bull, because there's new technology over new technology over new technology that keeps driving it forward. Quantum computers, solid state batteries, all kinds of things are coming. Changes to healthcare, because we are no longer an consumer-based economy. There are more people over the age of 40 than under 40, and there are more people moving into retirement. The participation rate in the jobs market is only 61%. It will drop to 50% in a few years, and we'll have an aging population. The aging population will need to have both turn the focus away from baby things and consumer products to healthcare. It's all about the cycles. The cycles are imperative. Next chart.
Next chart is from Cindy asking for analysis of Open, OPEN.
Oh, okay. Well, we have a sagging line here. This is a sideways pattern that's sagging. We're going to take a look first at the weekly scale. Even though you are swing traders and day traders and platform, if you may be a platform position trader, you should look at the weekly charts once in a while just to see what's happening. Okay, so that's the support level and it's teasing it. So we'll go back and take a look. That's the support level. It's barely hanging on to it. It's not a topping formation per se. It is a correction that is moving sideways and has moved down. It is a penny stock because it's $4.42, 49% institutional ownership, which is very low. Anything under 50 is really kind of scary, because then what you have is you just have your retail traders trading against retail traders, and you don't have pros. Pros do not trade penny stocks. There's no money in it for them. They're swinging 1 million to 5 million, sometimes 10 million share lots. They mitigate their risk by using options, puts. So if you're an options trader and you're thinking, oh, look at all these puts, the options market knows the stock or the market's going down, you're wrong. Don't do that, because all that is the pro traders, that's their insurance policy. All of those, they'll either sell them just before they expire, or they'll just let them expire worthless. They got a 5 million open order on something, and if doesn't move up in the month like they're expecting or the weeks, they just sell those puts and move on. That's all they do. So be very careful, because what you hear on your retail news is not truth. This one is iffy. Let's see what it's looking like on the monthly scale. Okay. It is a youngster. It IPO'd in 2020, which was a disaster for most of them. They rose up on speculation because everybody had all of their money from the government, their stimulus checks, and so they were gambling on the market. And it crashed and went up, and it's crashed even lower. And so it's trying to find support. My guess is that it's fundamentally based. We have very little activity in this stock at this time, so they're not quietly accumulating it, and we have huge speculation. This is HFT, a huge volume spike, HFT. Smaller funds blasting. This is smaller funds, smaller funds, smaller funds. So that's all, but very little activity here. You could put it on a watch list, but it needs to get up to the $10 mark before pro traders will even consider it. Okay? So you have a little bit of a waiting time. It has to prove itself. It reports on August 4th. So it's got a ways to go. It's not ideal. Okay? And there's nothing wrong with that. I appreciate that you offered it out, and don't be upset that it's not really great and wonderful. One of the problems is the real estate sector has reached its market saturation for this cycle. There's a 20-year cycle where every 20 years, the next generation starts buying. Well, everybody who wants to buy and can afford to buy a home has. And so now there is too many houses, too much inventory housing on the market, and the institutional investors in real estate, which have nothing to do with the buy side at all, is strictly institutional real estate, huge corporations that run the real estate market, are holding back because they don't want to pay a high price for these, and they're hoping that the market will crash, and then they'll buy the houses. So real estate is not the perfect. There's other industries that I'd kind of coax you to take a look at, okay? But it's very good to bring it up. Thank you for bringing it up. And the next one?
Next stock is from Steve for CLSK.
CLSK, CleanSpark, Capital Markets. Okay, it is either it is something to do with the capital markets. It could be a smaller public company or a private company. It could have a dark pool ATS venue where the dark pools trade. The dark pools trade only on the ATS venues. The only ones allowed into the dark pool ATS venues are the buy-side institutions or the global asset managers, and that's it. Nobody else gets in there. Pro traders as well. So if somebody says they've seen the oh, we have whales, I'm going, oh my gosh. Whale was a rather nasty term used in the 1950s when there was a surge of huge growth in the economy, because everybody came back and there was this big boom in demand for United States products and manufacturing. We went into manufacturing after that, and because we were all set up from the war. And so they had doctors and attorneys and professionals who were making huge amounts of money, top-level managers at Boeing and other places, because growth was just massive. And so they would call the stockbrokers of the day had desks in a floor on the Wall Street, on the New York Stock Exchange. NASDAQ didn't exist in those days. It was just an NYSE, an American. And so those guys would have to get a list of stocks. These are the stocks you're going to sell today. Sell them to all your preferred whales. Because a whale was somebody who had a lot of money to invest in. You're calling a doctor, and it's the middle of his day, and he's busy, and you're promoting this. He's promoting this stock about, oh, this is great and wonderful. You should get into the stock. Guy goes, just to get him off the phone, he says, yeah, buy me 50 shares or 100 shares or whatever. Okay. Capital markets are very different nowadays. Capital markets are going into a global market. We are becoming a global financial market, and the U.S. stock market, being the largest, is the center of the universe. And all the other financial markets circulate around it. It's very important to understand that. So this is part of that group. It is a older company. It has started quite a bit ago. So let's see. Yeah, 13. Wow. So it has been sideways a lot. It is not having success as it should, but you might be able to do some swing trading in here. It has 87% institutional holdings, so it has something important. I don't know the company personally, but you can see that we had all this buying and the speculative action, and then all of a sudden, dark pool started selling some of that, and then it crashed thereafter. So you're always going to, when you learn the dark pools and how they function and what they do, you will always be ahead of all of this activity that causes so many losses for so many people. And people were buying on the dip, and then it was crashing, buying on the dip and crashing, buying on, these are buy on the dips. Oh, let's buy this stock because it's still going to go up. Buy and dip crash, buy and dip crash. Were you part of this? This is not healthy. I see an awful lot of black candles. I see some quiet accumulation right in here. So this is where they're interested, right? And this is the price range that they're interested in. They are not as heavy. This is pro traders trying to nudge it upward at this point. So you have some accumulation going on. And the weekly chart is a sideways trend. Let's pull it out so we can mark it. And we have a definitive market sideways trend, very definitive, very well defined. So within that, we have some dark pool activity, and we have some pro trader nudges. This is a springboard pattern, and this is a just ideal springboard pattern. And it can just drive the price up. Then they start nudging a little bit, but they would get out at this point before it actually starts collapsing. That's your pro trader. So this is an interesting stock. It's $15, so it's just barely in their range when they get into these nudges. So it's just barely in their range. They usually don't go that low. I would say you could put it on a watch list because there may be some progression going forward, but I would also investigate what the capital market does, because it may be that this activity that we're seeing here from the buy side is actually preceding someone taking the company over. This looks to me like a company that is has potential to be taken over by CBOE or whomever could use the capital markets that they have, capital where what they're doing. And so this stock, mergers and acquisitions are going to be a lot this year. And these companies will start showing speculation. It'll start going up in price and moving with speculation, if that is true. It looks like a company that mergers and acquisitions, maybe even hostile, could occur. So you can keep an eye on it, but just be aware of all the facts that are hidden behind all the information. This just looks like it to me. It looks like some of this is somebody accumulating to, it could be BlackRock, it could be anybody, but somebody wants to take this company over, it appears to me at this time. Okay, next stop.
Okay, I think I'm going to stop the stock requests here because we've got quite a few questions to go over.
All right, that's great.
Okay, so Ravi is asking whether we need to see reversal on daily or weekly chart.
You need to see reversal on daily chart. Weekly charts just give you where the support and resistance that's not visible on the daily chart. I use that and say, okay, where is the resistance? Where is the support? Because sometimes you won't see something that's there and that can cause a whipsaw. So it's just a quick check. It's just a quick check.
Great. Next question. Dark pools appear to submit orders for the record around 3 a.m. Eastern and other times, which distort a lot of volume price indicators. How to deal with this distortion?
Where are you getting this information from? Because that's not true at all. Dark pools are invisible and they trade on the ATS venues. The data that you're claiming that there is visible early morning is not theirs. They do not move price significantly, and they do not, they have never, ever disturb the market open. They never disturb the market open. Their TWAPs start after the market opens. And it's on ATS. There is no way to see their activity whatsoever. Someone is not giving you truth. What you see before the market opens, what you see the activity that is occurring is high frequency trading companies. They use AI. They are the only market participant group that is heavy into AI. The fourth quarter, the AI made so many mistakes. This new quarter, it didn't. So they're learning. HFTs are computer-generated orders. They are maker takers for the exchanges because with the penny spread, the New York Stock Exchange and NASDAQ would go out of business with the lack of liquidity that we have. During the day, the liquidity drops so low that there is nothing going on. It's either first of day or end of day. HFTs are approved by the SEC to provide liquidity or liquidity draw at market open. So what happens is the AI goes out, HFT AI goes out and collects all the information that it is able to access. Any open chat room, any open website that's financial news, any open website that has, like some of the charting software companies have everything wide open and everybody's trading actively and everybody's going on and things. It collects all that data. The AI calculates it and figures out what is going on, and it moves the price of the market at open by filling the queues with 100 to 200 share lot orders, millions and millions and millions of them, just a stunning amount, just tons of the orders. It fills the queues with those small lot orders. It is not the size of the lot, it is the quantity of the lots that the computers of the market, New York Stock Exchange and NASDAQ and others, determine that they either must gap up or gap down the stock based on the number of orders that are in the queues. So if it's going to be a down day, and because everybody is negative around the retail groups, so HFTs are front running you, they will fill the queues with sell orders. These sell orders are visible to the sell side institutions, to hedge funds, and everyone else because they're all trading on the millisecond before the market opens. How many milliseconds are there in the second? 60,000. How many are in a minute? 320,000. You can't fight this. This is impossible. This is front running you, and they do it all the time. If the sell side institutions, the big banks, need money, they will try to push the market down and cause the market to gap down and run down to sell short. And they will sell shorts. They'll just place their orders there. They don't even have to start them. They just place their market makers. So they just place their orders and they have their buy to covers way down here. And that causes this huge collapse at the market open. Buy side has no activity before the market opens. They don't even start anything. So whoever is telling you this stuff doesn't know what they're talking about, or they're trying to deceive you and make you think that the buy side institutions or the dark pools are evil. They're the ones that are making sure that you, in this volatile market periodically that we have, that your pension plans are fairly safe.
Okay, great. Next question is about dark pool footprints. Kunal is wondering if this is an indicator, and does it work in a Forex market with currency pairs?
The dark pools are not into the Forex market. They don't really trade that market. So that market is different. That's the banks, that's the sell side institutions, and they're actually doing exchanges of currencies and valuing it. So it's a completely different market than your stock market, which is where the buy side institutions are investing in US corporations to the benefit of all of the 80 million families that have pension plans in the stock market. So you won't be seeing the dark pools over there.
Okay, and one more about dark pools, it looks like. Can you see the dark pool activities in book map, like FinViz and Stock Charts have this, book map that you can see activity. She's wondering if you can see dark pools there.
No, the dark pool is completely blocked. HFTs tried to sneak in during the pandemic, and SEC caught it right away and slapped them, said no. The ATS venues are virtual. They're not connected in any way other than there's no way to get into seeing them because they have no market maker limit order book, and all of the things that you can see have that. They don't have that. Most of the activity is peer-to-peer, or they go directly to the corporation and they buy stocks. If you have TC2000 or another stock chart that has the percentage of shares held by institutions, anytime a stock goes over 100%, they have gone to the corporation and bought stock directly from the company. It's very common. We have hundreds and hundreds of stocks that have PSHI right now, over 100. Some of them 120, some of them 130. They've bought a huge amount of shares of stock. That's not going to show up on your charts, and that's not going to show up anywhere on the market. You can't see into these. I know everybody thinks they can, but what you're actually tracking so that you can feel calm about this is smaller funds managers. Smaller funds managers trade 100,000 shares, 500,000 shares, lots mostly. And everybody thinks that's a large lot. Oh, 500,000 shares, that must be a dark pool. It isn't. They're buying millions of shares, millions. So the confusion on the market right now is that they think they found the dark pools because everybody wants to find where the dark pools are. Well, they're in your charts on the daily after the end of the day. But before that, they're nowhere to be found because they haven't passed the national clearinghouses. And since the ATS venue is completely dark and there's no way to see into it, they transfer that. And until that's transferred, it's not in the charts. So seeing it intraday is impossible because those orders are filled, but they're held until after the market closes. They can't see it. I know that it's out there a lot of times, and I know it seems like they know what they're doing and it's all exciting and, oh, this is just super easy. But you're just going to lose money because you're chasing small funds managers. And they are, right now, there's a whole lot of small funds managers that are going bankrupt. They did a whole lot of gambling and a whole lot of speculation, and it went against them. You have to have a rule-based system that you abide by and follow for consistent success so that you always are have very few, very small losses and huge profits comparatively so that you are always successful. There's no way to make yourself confident. And that's what happens to small funds managers. They start to doubt themselves because they're losing, and they lose their self-confidence. And these people have no experience. They are not credentialed. They don't have any initials after their name. They don't have anything. They're just a person who started a small fund. And perhaps he started with neighbors and everything else. Then he went public and he's got investors he has to please. The small funds industry is in terrible shape right now because they're gambling and they're losing money. So these are not the dark pools. These are just small funds managers. And the information is really worthless because you shouldn't be investing in small funds asset management companies, all the public ones, because they're all in trouble right now. They're losing money.
Okay, let's stop there with the questions and we'll take the rest at the end.
Okay. So do we want to do more charts or what do we want to do?
No, let's go back to the PowerPoint.
Okay. Let's go back to the PowerPoint. We will go back to the PowerPoint.
Yeah, we're at the hour now.
Oh, are we? Oh, it went so fast.
Yeah, time flies.
I'm having fun. I'm hoping you're having fun.
And the next slide.
Is this you or me?
This is you.
Oh, okay. The Methodology Essentials course. Today, we were introduced to the 3 primary dark pool footprints. This is just the beginning. There is more to learn. The Technotrader methodology Teach is the full process. Methodology Standard course is for beginners, anybody with less than 2 years. The Methodology Premier course is for traders with 2 to 5 years of trading, and the Methodology Elite course is for advanced traders and semi-professionals. I have a lot of students that become semi-professionals and professionals. One managed a $100 million hedge fund after he got out of my courses. So the standard course, ME10 course, has a 1950 value. 3 advanced volume analysis courses have $495 each. A gift for all of the attendees, how to recognize dark pool footprints. Check your inbox later today to download the PDF. So what am I supposed to do from here, Millie?
You're good. We're going to hold the prize drawing now. So let's see, for the grand prize of the Standard Methodology Essentials course, this is a course that not only comes with video instruction from Martha and Howard on all of the things that you need to learn to trade stocks, everything from what a stock is to technical analysis, to the history of the market, all of the leading hybrid indicators that we teach, buy signals that are proprietary to our methodology, risk analysis, order entry, everything that is proprietary to Technotrader is included in this course. But not only that, you also get standard tools for whatever charting program you use. We can support most charting programs. And you also get support. Email support is unlimited. You get a month of free market reports from Martha daily. We hold regular mentoring sessions for students. You get those, a couple of those free. We can do one-on-one coaching. You get a couple of those free. So it's a full support system that you get with this course. And it's valued at $1,950 full price. So for our grand prize, Martha, pick a number from our participants. The total at this moment is 38. So pick a number between 1 and 38 for me.
25.
See. Looks like the winner is James Bonds for that one. Congratulations, James Bonds, for receiving that course. You'll receive it shortly today. Next, we're going to have the prize drawing for 3 advanced volume analysis courses, valued at $495. This is a very recent course that Martha did, which was really popular with our students. It's definitely going to help anyone who's trading currently or learning to trade. So Martha, pick for me a number between 1 and 37.
10.
10. Looks like that prize goes to Deanna Rutkowski. We're going to be sending you an email here later for access to that as well. Just make sure I got her. Okay, and for the second of the advanced volume analysis courses, give me a number between 1 and 36, Martha.
31.
That one goes to Steve Ewert.
You'll really like this
Congratulations.
course. It's really great. The volume course is really awesome.
Yeah, students really loved it. Okay, so that's the second of the advanced volume courses. Martha, give me a number between 1 and 35.
17.
Let's see. That one goes to Lana Wisman. Congratulations. Note. Okay, so that is all 4 of the prizes today. All of you will be receiving an email with instructions for how to access your free course. And also, all of you will be receiving for attending today, everyone who actually attended the session today will receive a PDF download to your email later on for a follow-up resource for using the information that you learned in this workshop today. It'll be on how to start recognizing dark pool footprints. Okay, I think we are pretty much at the end here, right, Martha? Do we have another slide?
Let me see. Yeah, we do. Final Q&A.
Okay.
Anything else that we need to have? Any questions that you have? Anything at all?
Yep. Let's go over some of the questions that we
Okay. Yeah.
skipped. All right. Okay, so we got to all of those. Sorry here. We're coming here soon. Okay, for retail day traders, is there a best time of day to trade?
I really would encourage you not to day trade. Professionals don't day trade. They haven't day traded in many, many years because of the penny spread. You're trading against retail traders and smaller funds managers rather than trading with the professional traders. Is there a reason why you like to day trade? Is there a poll on this? How many years experience do you have?
That question was from Lana. Are you still here, Lana? You can unmute your mic if you want to answer.
I've traded for probably about 6 years,
Mm-hmm.
but have not been that successful with day trading. So I'm trying to just see if there's a way to do better at that.
No, you need to give it up.
I think I will.
Yes, my dear. Swing trade, swing trade. Right now your confidence is wounded and everything. And so, did you win something?
Yeah, Lana won the one of the advanced volume courses.
Okay. Watch that course. You can go over it as many times as you want. It is pithy. It is full of things. It will help you. And then you need to start swing trading. All of my students, they do swing trading or platform position trading. Platform position trading is for those people who are too busy to trade every single day or whatever. Although even swing trading isn't you trade when the market is moving in the direction you know it's going to go. Platform position trading is for people who are really busy and have a full-time job and they can't devote the attention to it. So they can trade on Thursdays or Fridays and they hold the stock for anywhere from a few weeks to a couple of months. And that is very lucrative. I had one woman who I had a lot, but one in particular, because she thanked me. She said she wanted to be a stay-at-home mom and stay with her kids. And she had a degree from she had a high degree and her husband worked for Boeing. And so she wanted to stay home. So I had her do platform position trading. And one year she wrote me, she said, Martha, I've made more money in my platform position trading than my husband, who makes a lot of money at Boeing. So that's how it was. It really is helpful for those who are super busy, and it allows people to continue to work that are younger and still trade the market. Those are the two that are the most popular.
Thank you so much.
You're welcome.
Great. Next question is from Liz, wondering what are your thoughts about futures trading for retail traders?
Futures trading is really a professional platform. And since they have knowledge access that you don't, it's going to be really, really tough. Were you thinking E-minis or what were you thinking?
Are you there, Liz? She might have stepped away.
Okay. All right. Well, yeah, I would say it's a tougher and more risk than most people should take.
Oh, Liz just typed in NASDAQ futures is what she's interested in.
Why don't you trade the Qs? Why don't you trade the Qs? Trade the
ETF.
Qs. It's an ETF. It's very popular. It's a whole lot easier than the futures. The futures are tough because you're trading against hardcore sell side floor traders who know what they're doing and they're trading aggressively. The buy side institutions do not trade futures at all. It's strictly sell side and hedge funds. So you're trading against experts who are willing to leverage a lot of money. And so it can be wicked. It can be wicked. Use the cues.
And probably a good question to end on is, what do you think about the SpaceX IPO coming up?
Well, I'm going to be writing a whole long-term portfolio discussion on it. I have the morning market report, the market condition report I write in the morning, and all my people get it before the market opens. It gives them all the information they need to know about how to trade for that day and where the bias of the market and all this stuff. Then I have the daily market educator. You get all this stuff with your course for 30 days when you start. The daily market educator, students can ask questions or they can do anything that gives information on it. But this was a long-term question about SpaceX and its future and IPOs and how do you know that you should invest in it or not? And it's the first question with an IPO. It doesn't matter who it is, except for maybe Google or Visa, some well-established company, somebody that's been around for a long time, and they suddenly decide to go public. Well, they're obviously they're very successful, and their IPOs probably for expansion or something like that. But any IPO is about money. OpenAI and some of those are on the NASDAQ private market, so they've been getting investors' money from that, and that's pretty secure. But I also say, why do they need the money? What do they need the money for? Why does SpaceX, if they're financially successful, why do they need more money? What are they going to do with it? Are they over leveraged? Are they over invested in R&D? Is their R&D so heavy that it's taking all of the profits that SpaceX makes from its satellites and its other things, and so they need to go public because they're deep in debt? We don't know. We haven't been given their knowledge. The public doesn't receive this until just like the day or the day before. Preferred clients are not buying a lot of it. Preferred clients are usually the buy-side institutions, and they're just not heavy into it. They're holding back, and I don't know why, but that's a warning signal. Sell-side institutions and the underwriters are just going like crazy, promoting it all over the internet, blah, 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 JP Morgan, Goldman Sachs, ooh, they're going to make a killing because as soon as all of the retail groups, everybody gets up in the morning and the bell rings and you start buying in your orders in your broker and it's going, and of course the stock is just going to go whoo, through the roof. But is it going to stay there? No, it's going to go if there's anything wrong with the fundamentals whatsoever, but we don't know. It's not a Google. It's not a Visa. It's not one of those companies where it's always so well established that whatever price it starts at is going to keep going up for years and years and years. We don't know enough about the company to know what's going on. And yes, Elon Musk is brilliant, but he's also made tremendous mistakes. And it could be that he needs a lot of money to go further because last time I heard or checked, he hasn't had a single rocket that successfully launched and didn't blow up. That's a lot of money. And it's something that's futuristic. It's going to take decades, and I mean decades, before there's a ship that goes all the way to Mars, which is his goal. It's going to take a very, very long time. We can send a robot or something through space and it goes, and 5 years later it reaches Mars and starts tracking and studying things on Mars, and it's a little cute little robot. But sending an actual rocket with somebody in it is really way out there. You have other areas that you could spend your money. Electric producer, proprietary producers of electricity. Huge, huge. Quantum computing is moving faster and faster. Solid state batteries are going to come, and there's going to be this huge competition thing because then it eliminates lithium Goodbye lithium. And it's going to be in everything. There's electronic components. There's the next layer of infrastructure for AI. There's a ton of things to invest in that are far less risk and are immediate growth potential rather than possibly future growth. I don't know what it's going to do at IPO. I do know that traditionally stocks have this huge run up at open when they IPO, and then they typically collapse because the fundamentals are not there. Whether they do or not, I don't know. It is a company that has been established for a while, but I'm just curious as to why it needs more money. And they're going after the big bucks. They're going after a huge amount of money. And so they're getting everybody excited and everybody's interested and everybody's eager to get going and buy this stock. And they're going to burn you because they're going to sell right into your buying. They're going to sell into your buying and they're all hyped up for it. The banks are not in good shape. The banks haven't been in good shape since 2008. And they are no longer the most important market participant group. The buy-side institutions are. The banks all claim that they're in good shape. They're not. They had the lowest gains of any industry in the S&P 500 this quarter. The lowest gains. It's like 1.4%. It's like, are you kidding me? So they are hoping to make big bucks, and they're trying to get the SEC to open up more IPOs and offer more IPOs. Well, 60% of all the IPOs that come to market fail. And what I mean by fail is they are delisted because they drop below $1 a share. And that's one of the requirements. They have to be above $1 a share. And because they have no liquidity, they're R&D, they don't have any money. They blow out all the investment money they get from the underwriters because the underwriters buy the stock from the company and then they resell it. So they make a huge amount of money on it. So with 60% of all of the IPOs failing, they either go to the pink slip, which is over the counter with your broker, which is very expensive and risky because they're not out there in the public. Or they go to NASDAQ Bulletin Board, which is also very risky and has a lot of stocks, and they languish there and they never do anything. And once in a while, somebody will go, oh, let's buy this Bulletin Board stock because it's 3 cents and I can make a fortune. And of course, you lose everything you have. It's just a ripoff. And then there are those who go bankrupt. And when they're bankrupt, investors get nothing. Nothing. So they're very high risk. IPOs, there are a few that go up, but most of the time what you should wait for is, well, like I showed you, there was a stock that's moving up and then it's bottoming and then it's finally starting to show a bottom and show some growth, and it's got revenues and earnings and it's moving forward. The earnings may not be positive yet, but they're moving in that direction. And it has PSHI over 100. So of course the institutions are going, the buy-side institutions are going, oh, well, this company has finally come around. It's done with its R&D. It's starting to sell product. It's starting to turn itself around. Let's start investing in it because it has a great product and the product is ready, or service is ready to go now. But that was 5 years after the IPO. You got to be careful because the people out there, the sell-side institutions, couldn't care less about you. And they will take your money. So I don't know how it's going to turn, but if it goes the way 99% of the IPOs go, it's going to go up and then it's going to crash.
Okay, let's see. Lolita's asking about the course. She asks if the tier 1 course includes all the scans and charts.
Yeah.
I can go ahead and answer that one. The
Sure.
standard course comes with all of the most important scans and charts. It comes with all of the hybrid indicator chart templates that we pre-set up for our 3 fully supported programs. But we do have all of those chart templates for other programs such as TradingView, Thinkorswim, all of the most popular ones. But the scans that come with the standard tier 1 course is the most important market condition scans. There are 4 of those. It is with the premier course, the 2nd level, that you get all 7 of Martha's market condition scans like she showed in the beginning of this presentation. And then the next tier, the top tier 3, Elite, comes with all of what comes with the premier course with the advanced tools. and chart templates and much more. Martha goes over fundamental indicators as well in that course because the advanced relational technical analysis is only included in that elite version. Okay. Okay, so we had a great session today. Thank you all for coming.
Yes, thank you for coming. I hope you enjoyed it and had a good time. I hope you learned a lot. And you can always get in touch with us and check out our website and see everything. Most of the time, our sales are referrals. We have a very low profile, very nice one person that sells. That's how few I need is, and she's very sweet. And either I'm right for you or I'm not. And you by now you should know. You should know. And it takes money to make money. And I am very committed. Mel is very committed to making success. And we have 50 pages of students' remarks about us. So you can go to the website and check it out. And if you feel that we can help you, I'd be delighted to have you become a member of my group of people who are consistently successful, because it's really awesome. When I'm told that I've changed people's lives and that they're setting up for their children, grandchildren, and great-grandchildren, it just makes me tingle. I do this as a legacy. I'm retired. I've been retired for a long time. I love teaching. I have great passion for it. So does Mel. And I want to leave something behind. And so all of this, all my work, some 64 courses and everything that I've done, is to leave behind a legacy that will continue. And then my students are continuing it because they have the ability to set aside a legacy for their family, and then it continues on. So it's just what I need to do this. I want to leave something behind. So thank you for joining us today. I had a lot of fun. I hope you learned a lot, and good luck with your trading.
So long, everyone. Have a great weekend.